So you live in a state like Florida where competition for housing is still pretty fierce. Anything that's move-in ready on the limited inventory gets snapped up quickly, and a lot of them are going into multiple offer situations, and you just can't compete. Well, there's an option. An FHA 203K loan may help if you're willing to take on a fixer-upper. What's an FHA 203K loan? Stick around, I'll tell you all about it. Welcome to Dre's Take. So an FHA 203K loan is a Federal Housing Administration insured loan, basically your typical FHA loan. However, it allows you to combine both the purchase price of the property and renovations into one loan. Obviously, this can be advantageous if you're willing to take on a fixer-upper because those properties are likely going to have less competition and your offer may actually get accepted. It's very hard right now to compete with an FHA loan against conventional large down payment products or cash buyers. The FHA 203K loan allows you to purchase a fixer-upper with the classic low down payment that an FHA loan affords you, 3.5% or so. Now, the renovations have to be done within 6 months after the property is acquired, and there are some requirements to it. Let's dig into those. Now, there's two types of FHA 203K loans. There's the limited and the standard. The main differences are with the limited, repairs that you intend to do to the property must be less than $35,000. They also don't allow structural repairs or alterations with the limited version of this product. Now with the standard version, you can make structural alterations and whatever else you need to do essentially to the property, but the repairs must exceed $5,000 minimum. Other than that, there's really no limit. Now obviously the repairs and the cost of the property when combined must be within the after repair appraised value. So essentially you'll get a scope of work from a contractor, you put those numbers together, and then the bank's gonna send an appraiser out there and he's gonna look at the project and say, okay, after all these repairs are done, here's what I think the property's gonna be worth. That value has to meet or exceed the loan amount that you're taking on. In some cases, the loan to value ratio can be as high as 110%. Now, how is it different from a regular FHA loan? It's really not, as far as the requirements are concerned. 30-year fixed mortgage, 3.5% down, low credit requirements. Technically, you can go as low as 500 credit score, but that's going to require a heftier down payment than the 3.5. Technically, anything under 580 is going to require a larger down payment, somewhere around 10% or so. And most lenders who administer the program are actually going to have their own overlays, and they're going to require like a 620 credit score. So just to be safe, let's say 620 is really the threshold in order to get that 3.5% down payment. And the debt to income ratio needs to be below 45%. What can the FHA 203K rehab loan be used for? Pretty much everything. Unless it's the limited, you can't do structural repairs or alterations, but you can pretty much do everything else. I mean, everything from the landscaping, flooring, plumbing, electrical, anything that you'd really need to do. Renovate a kitchen, make things more functional, get rid of obsolete components in the property, etc. And with the standard, you can actually do all those things and make structural repairs. So you can actually do an addition, add a fourth bedroom or whatever the case may be. Now, luxury add-ons are not something that's going to be covered. So things like pools, hot tubs, tennis courts, these types of items that are not, typical, these are not going to be included. So just think standard renovation. Now, this product can only be used by people who intend to live in the property. Just like any other FHA loan, it's intended for primary occupants. So you've got to intend to live in the property after these renovations are completed. This is not available for investors. This is not available for somebody who wants to purchase a property, renovate it, and flip it. This is only for people who are going to live in the property. There are conventional renovation loan products as well, but they're a little more strict as far as their loan to value requirements and whatnot. They don't go up to 100 or 110% like the FHA does. So it's a little bit more tricky to navigate those products. this is really the best bang for the buck when it comes to renovation products if you intend to live in the property, because you're going to be able to maximize the amount of money that you're able to get to make that home suitable for you. Some of the cons are you're going to have mortgage insurance for the life of the loan, just like any FHA loan, until you refinance into a conventional. Also, sometimes the FHA loan interest rates may be a little higher than conventional, depending on your credit score. Sometimes they can be lower. The process also requires a bit of extra legwork. You've got to meet with a FHA repair consultant. You've got to get the scope of work from general contractors who are going to perform the work, and they've got to kind of know the process and adhere to the timelines as the transaction is taking place. So it's a lot of moving parts and pieces. But if you're willing to take it on, it can be extremely beneficial for a lot of folks out there. So I wanted to spread the word about it. It's not a new product by any means, but a lot of people don't know that it exists or could use further details around it. As always, if there's anything I can do to help, let me know. I'm always happy to talk shop, point you in the right direction to some qualified lenders who know how to administer this process, and we can get out there and go home shopping. That's going to be Dre's Take this week, y'all. Take care.